1 points with just about 8 minutes left in the trading day.
Yeah, it's turned positive, folks. And as I said before, the NASDAQ is also positive as we look at the Dow Jones above 13,000. Remember, 13,000 was that floor through which the market had crashed. Some people thought it would go down to 12,000. But bucking the trends, bucking the experts, you got to love it when the experts are wrong. They may not be wrong forever, but they were certainly wrong today when they said it in negative, because we just have 7 minutes left, and it looks like it's going to be positive.
This is an even niftier trick with the Dow being up 60 points when you hear that crude oil ended the session at a record, and it is trading even higher right now in the after-hours market. Right now it's at about $98.45, and it ended at $98.03, I believe, $98.03. So even so, the market seems to be brushing that off. So let's go to our panel right now to talk about this, David.
We start with the man who knows oil better than anybody I know anyway, which is Eric Bowling. Eric, you see the future just continuing to go up and up and up for oil. I have to ask, I just got to do it, is this because you're betting on it to do that?
No, not at all. In fact, I have very few. I have a few integrated oil companies, which, by the way, I do not recommend you own integrated oils. I think there are better ways to play.
Define integrated oils.
Integrated oil is a company who, the big oil companies that bring oil out of BP, Shell, ExxonMobil, Chevron, they bring oil out of the ground, they refine it, and then they sell it to you. They have that whole integration of the business. I don't think you should do it. I think oil prices are too much of a factor in integrated oil. I have a small piece of the portfolio in that. I do think oil prices are going to continue substantially higher. We're at $98. We're going to see $100 tomorrow, giving one slight amount of bullishness in that inventory number, bullishness to the oil price. You're going to blow right through $100. You may see $150 given any sort of geopolitical unrest.
Tracy Burns on the floor. Mama, talk to us about the action here.
I'm telling you, Liz, this market is about as predictable as my 3-year-old. When we started this day off this morning, we had bad news. You know, you get the Fed minutes, you had the financials in the toilet. We got a rumor about Countrywide shutting its doors, which, you know, that could still prove itself. Then we have Service coming out saying the Chrysler deal is not going to happen. Everyone thought we were going to end under 200. And here we are. We're up. I still say it's you guys. You're our ray of sunshine. But the other theory is that the market is being very resilient. And as much as this is all news today, it's not new news. So once it's digested, the market kind of settled back to where we started. And to Eric's point, it actually is surprising to so many people. You know, we have oil up so high, yet why isn't the market reacting similarly? Again, I come back to my 3-year-old. Don't know why she flips out sometimes. That is exactly where this market is, you guys. Back to you.
Perfect, Charles.
Well, you know, over the weekend, OPEC met, and King Abdullah of Saudi Arabia more or less said he was doing us a favor by having oil at $100. He suggested that $100 was really low. So to me, the fix was in coming into the week. And I agree with Eric. I've been pounding the table. I tell folks out there all the time, you can get angry when you go to the pumps and kick the pump if you want. But you know what? You might as well have some exposure to oil. I mean, I've been talking about the drillers and the servicers, which I think are great places to be. But I don't know, 150. Ultimately, it could even go higher than that. But the fact of the matter is, what I do like is the fact that stocks can go up with oil. For a long time, I've said that at some point, maybe it's a headwind. But right now, I think it's actually a reflection of our economy and the global economy more so than a headwind, and that's why we've seen oil and the stock market have broken out over the last 4 years together.
Tracy says she doesn't know why. Actually, it reminds me of that song Stormy Weather. Don't know why, there's a cloud up in the sky, but you know why there's stormy weather, right?
Well, sure. You know, the Dow is up a little bit today in dollars, but in everything else, it's down. You know, Liz, you might not like gold cars, but you got to like the metal. It's up over $20 today. Look at the gold stocks. Look at look at Barrick Gold up over 8%.
$803 for gold and 60
Barrick
cents.
is up over 8% today. You know, Freddie Mac dropped the bombshell on this market today. I don't know why it didn't blow. I don't think it's a dud. Maybe there's a long fuse, but I think there's a huge decline coming. Like I said last week on this show, there is tremendous risk in this market. There's a lot of downside to come. There's a lot of complacency out there. There's bad news coming. There's bad news today. The market is ignoring it. But if you look at what's happening in the foreign exchange markets, if you look at what's happening in gold, and you know, there's a lot of these bonds guaranteed by Freddie Mac and Fannie Mae all over the world. They're not going to be too excited when they wake up tomorrow.
But 5 seconds. What do you say? What's going to happen?
You know, I think the stocks that are being penalized are the ones that deserve to be penalized. Financials, Countrywide. I think it's a market of stocks, not a stock market.
Long-term investing. Thanks, Pat. Thanks to our panel. And the closing bell is just minutes away.
Stay with us.